what Fed Chair Powell said on jobs.
There's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, but and that's just, again, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20. I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
Going through the research this morning, I think that surprised a lot of people, guys, that he suggested that job creation is actually negative because you could look at the numbers and say we're still adding jobs, but they look back at the track record, for instance, in the forecasting where those jobs are overestimated, and he went there. I mean, he said that there is a likely chance that they could be negative, and if that's the case, then the Fed's got work to do to preserve the labor market. And then on inflation, obviously there's this argument that inflation is high, is sticky. A lot of the members don't want to be cutting rates because of inflation, but listen to what he said on that front. Actually, I'll read it. We don't have the soundbite. That's my bad. So he basically said it's really tariffs that's causing most of the inflation overshoot. Overshoot means higher than our target. Tariffs likely create a one-time increase to prices. Our job is to make sure that it is. I think the hint there, David, is that, as far as the overshoot, the fact that inflation is higher than they would like, the fact that he's pinning it on tariffs and saying that that's a one-time effect is actually code for we're not as worried about it. And look, that might be just his own thing because we know that there were 2 dissents that wanted to hold rates, and we know that there were a lot of dots that didn't move from this year, which suggests that there were a lot of other members too that didn't want to move rates. But the 2 statements from Powell that I thought were most notable were jobs are negative and inflation is tariffs.
Yeah. When do we start to annualize some of the tariffs? Like, I mean, we all think of April 2nd, but it's very much unclear what really is applied when and how and to what.
Right. Well, a lot of people think that the peak is coming either in this quarter or the next quarter because, a lot of the retailers hoarded inventories and they're just starting to pass on some price increases. So it happens in next year where we start to come off of that, the one-time effect, if it is a one-time effect. But also what happens next year, the next decision, January 28th from the Fed, there'll be new voting members. And so this matters because the composition of votes changes, and I just wanted to highlight who's going to be added to the voting committee because it's important. Here's the 4 districts, okay? Because all the regional districts, those are the ones that rotate. Dallas, Cleveland, Philadelphia, Minneapolis. Let's take Dallas and Cleveland. Those 2 ladies have been some of the most hawkish voices, both of them saying we do not need to be cutting in December. So it doesn't sound like they were in favor. They didn't get a vote this time, but guess what? They get a vote in January. So the committee is going to become a little bit more hawkish. I would put Kashgari also in that kind of cautious camp. Didn't sound like he was too game to be cutting, even though, again, he didn't get a vote, but will in January. And then Philadelphia, I followed some of her recent comments, Paulson, and she's kind of on the fence. Sounds like she could go either way, which is only to highlight that, the bar is going to be higher next year, I think, for cuts, if nothing else, because of the composition of the committee. So we will have to see weaker labor market data for, I think, Powell and the others to really sway the committee toward keep cutting.
How many more meetings does he have, Powell?
He's got January. He's got like three more meetings. Yeah, because he's up in May.
Right.
Drops. It's probably going to drop.
Not too many.
No,
he said his job is to present the economy in the best way for the next Fed chair, right? Which is inflation coming down away from target, and the jobs market sort of intact and not getting worse. And it's a tricky dance because, as you said, you can make a case for either one right now.
Let's get to the stock story of the day, weighing on many parts of the market. That's Oracle, down sharply on these quarterly results as investors grow anxious about all the money the company's spending on the AI build-out. Joining us this morning is Citi analyst Tyler Radke, maintaining a buy today, lowering his target from 375 down to 370. It's good to have you, Tyler. Welcome.
Thanks for having me.
What'd you make of it? Is it about the sort of ratio of the CapEx move versus the forward booking revenue move, or something else?
Yeah, I think there's a lot of things, but look, I would say, put simply, the debt market is in control of the narrative right now, right? So you saw them, obviously, I think, come in with a very strong bookings quarter, their second strongest bookings quarter they've ever delivered. But you didn't see near-term numbers move up. Now, they did raise next year's revenue by $4 billion. at Analyst Day 2 months ago, they put out some pretty ambitious 2030 targets, over $20 of earnings. So we're focused on where is this company going. There's definitely a little bit of uncertainty, some near-term revision issues in the model, but this is something we're hearing from Microsoft, right? They're continuing to see the capacity constraints that's weighing on near-term growth, but overall growth is accelerating, bookings are accelerating, cloud revenue is growing faster than it was last quarter. We think that continues. Clearly there is a little bit of uncertainty though on the financing side of the equation. I think that's what the market wants to hear.
Is OpenAI sort of a weight around its ankles? And by the way, we're going to talk more about it with this. Does that change any of that?
Yeah, I mean, I think that is issue number 1 or 2 from investors. It's the financing thing, and hey, what's going on with OpenAI? Can they pay you $300 billion in their contractual commitments longer term? So obviously we'll get an update in a little bit here, but our view is, look, AI, this is a massive market opportunity. If it's not OpenAI, it's going to be somebody else. These data centers are fungible. If it's not being sold to OpenAI, they could go around and quickly reconfigure that to somebody else. We think that they can make very good money selling us over $20 of earnings by 2030. So I think in a year from now, this provides a good entry point.
How extreme can the capex, the revenue to capex, the capex to revenue ratio get? Where are we right now? 3/4 or so in revenue?
And look, I think the reality is the capex is a read on that forward revenue, right? So we're expecting revenue to grow 3-4x from where it is now. But of course, you have to front load those investments, right? Data centers are very capital intensive. I think a good analogy though is you look at the early days of public cloud. What were Amazon with their AWS business doing? They were not free cash flow positive for so many years, right? So this stuff, you have to put in the money early, but it's very fruitful as customers you start to sell on more profitable services. That's what we think is going on at Oracle.
But in some ways, it's asking a lot of Oracle investors, at least long-term ones, who are very much accustomed to a company that generated a lot of cash flow.
Absolutely. I mean, their free cash flow is negative. They're increasing their leverage. This is a more capital-intensive business, but you're seeing it across big tech, right? Meta's free cash flows come down significantly. Microsoft, they're not dipping into the red, but $80-100 billion of capex is a huge number that Microsoft wasn't doing in the past. Oracle, it's more outsized because they are playing catch-up, right? They missed the early days of public cloud, but we do think that they have something differentiated here, and so I think this investment makes sense, provided you have that confidence.
So when does the stock start to reflect your optimism?
I think you need to get an update on the financing, right? Which you should get in the next 1 to 2 quarters. So I think over the 6 to 12 month time frame, obviously if OpenAI monthly active user growth starts to reaccelerate, that helps too. That's difficult to predict, but certainly looking forward to hearing what Sam has to say.
I mean, they're likely to maintain investment grade, aren't they?
Yeah, so
that's an important point. And they have alternative, I mean, I think they talked about that. They have alternative financing solutions.
Right, and so they can tolerate another downgrade to BBB negative, I believe, before they kind of get out of that investment grade. They talked to us last night. They said we're very focused on maintaining that investment grade rating. But again, there's other options. Customers could bring their own chips. There's vendor financing. We've seen a lot of these creative financing moves in the industry for sure.
Do you see them coming back to the debt market with some regularity in early 26?
Yeah, I mean, I think we're estimating that they need to raise about $60 billion of debt over the next 3 to 4 years. Yes, and so obviously they took up their capex numbers, and so between that they have some debt coming up for maturity. They will need to do some raising now. Could that be a convertible offerings, a mix of equity? That's hard to say. But we do expect them to raise some money here.
And you think it'd be well absorbed, Vivek?
I think that will provide clarity, right? What markets obviously don't like is uncertainty. So I think the extent you get clarity, and again, you get clarity on the numbers moving in the right direction.
But not just debt, it could be equity too, you're saying, right?
It's possible. Look, I mean, I think they were pretty clear to us. They're not going to do a share issuance, but if you look at some of the signals in the debt market, right, the spreads are growing, right? So if you do some interesting, creative debt-backed convertible type stuff, right?
But the backlog numbers number. I mean, that was the key number, right?
Absolutely. Grew
$523 billion deal backlog. What does that translate into revenue growth, and when's it going to be enough for the street not to worry about all this?
Right. So I think what's interesting, of that backlog number, massive growth, no question. A lot of that is long dated, right? But if you look at the current piece, which is the revenue expected to be recognized over the next 12 months, that accelerated meaningfully. So that grew over 40% this quarter. So I think you are starting to see that backlog flow into revenue. Again, their business is accelerating faster than basically anyone out there. Obviously, the bar is high, expectations are high, but this is, it's a stock trading with a, 30 times, if not a little bit less on earnings. So it's not a crazy valuation for something with a huge growth potential.
Right, that is putting the pedal to the metal like they are.
Yeah.
Tyler, thanks. Good one. Appreciate it. Tyler,
Thank you.
All right, still to come this hour, can't miss. You can't miss it. It's an exclusive with
Interesting.
Disney CEO Bob Iger, OpenAI.
I didn't realize it was that loud. It was so OBS. You have like little bars. It shows you audio. You probably didn't hear any of that. Then that's hilarious. It shows you your audio levels for desktop and for. So I just lowered the desktop, but now you might not even be able to hear it. I wanted you to be able to hear it because Sam Altman's going to be on there with Bob Iger from Disney. So. Okay. Do you still hear my voice, or is the radio still louder than my voice? Because I'm just gonna give you a TLDR on what I just said, if you can hear me. But if you can't hear me, I need to lower the desktop audio a little bit. So. Much better. Okay, well, can you even hear what they're saying though? Because I want you to be able to hear the radio too. For when Bob Iger's on and Scam Altman. And the TLDR on that was Oracle could go down to 160, and then I'm probably going to drop like 50K on it. I don't really want to chase it here because it went down 14%. Why would I chase it here? Sure, it's like 194, but whatever. Which is hilarious because if I kept my 200 shares from this morning, I would be up 800. I only made like 170. But I mean, I wasn't getting a chance trying to predict, where that was going to wind up. I also went on to talk about Lululemon, how like we're either looking at well over 220 per share, pretty much, or we're looking down to 160. Talked about that stock that I was showing on screen there, the ECC, how it's like a 5-year low and pays monthly dividends of 10 cents. I don't know why it just crashed another like 75 cents in the last 2 days, but it already had its earnings and everything, so I don't know what the fuck's up with that, but it's one to watch perhaps. Disney, Sam Altman, I don't know where that's going to go. Traditionally, I want to buy Disney around 80 and then ride it higher. We are literally sitting on 200 EMA on Disney. So it's like, it really could go either way. And if the market dumps, like if Oracle's a catalyst for a dump off, then, because I mean, we saw Micron start to dump, Palantir started, but Palantir started bullish engulfing, and so Micron has not yet, but Palantir did, just in like the last 30 minutes. American Eagle, 25 bucks. First recommended at 10, just sort of was kind of touting that a little bit, watching CoreWeave. Just curious here. CoreWeave puts you worth anything? Not really. See, that's hilarious. It's only 83.75, and the put is only worth 90 cents, but it already crashed to 81 already, and it's been up in the last few days, like from 70. Like 80 is very realistic tomorrow, and it only pays not even $1. That's fucked up. Disney is about to hit a support I'm really interested in Disney again here. I'm not interested in them having a partnership with Scam Open, but it sounds like they're going to license 200 characters to the generative AI that Sora can make or something. I don't know. I don't know everything about everything, but it sounds like an opportunity to make a bunch of money, and they gave a cease and desist to Google, meaning Google's probably going to come back to them and just say, like, rather than a cease and desist, how about you just do a deal with us for like $1 billion as well? So basically, you're just going to make $1 billion off of Google overnight, probably. And I mean, Disney's only worth 191. So I mean, if they can get $2 billion, that'd be like a 1% growth overnight. If anybody can afford it, it's certainly Google.
But going back to your question,
Thank you.
we have a small cap stock in today's world called Paramount. 1.1 billion shares at 15 is $16 billion, and you got this behemoth, Netflix. Netflix is $450 billion, greater than the market value of Comcast, greater than the market value of Disney, greater than the market value of all these other public income. So we have to work for the small underdog.
Right. You'd rather see Paramount get it because they need it more.
No, I basically understand that they will do better for the ecosystem because the guy running it actually made movies. He didn't buy them or rent them and then try to sell. He understands the culture. He made movies. It's like me being an analyst. I understand how analysts think. I don't understand how quants think.
Netflix makes movies.
Yeah, and where do they show them?
Well, sometimes
where are the windows?
Someone said that if Netflix got Warner Brothers, it'll be the end of movie theaters. Interesting comment, I think.
We did have Gladiators. Then we went to silent movies. Then we went to the talkies. Then we went to the black and white. And then color.
Interesting comment for sure. I don't think it would be, but you never know. Oh, Jesus, it's really pumping now, Oracle. Son of a bitch. I mean, that could have been my whole day right there. $195, that's $1,000, 200 shares. I mean, it just because it also dropped down to 186, so I would have been, at that point, I would have been down 800. So average is around 190.
Honestly, movie theater popcorn is the best. That is a reason to keep them alive.
I know.
In itself. So you vote with. So you will vote.
No.
With the Ellison.
It's fairly uncomplicated. Corporate lovemaking, M&A. Okay, this is a book we wrote. We wrote both books on M&A. This was the third one written since Ivan Boesky went off to somewhere. And basically,
we turn radio up a slight bit.
Company A and Company B having a bidding war. Come on, that's what we like as part of the free market system. It is appropriate.
A little bit.
Then you look at this deal. At $30 a share.
Better now. Turn up radio slightly when you want to see here. Etc. But it sounds good now. I had to go see that new Tron movie. But they already moved it out of the theater? What? Holy shit. Okay. Crazy. Yeah, they don't even give movies a chance anymore. It's kind of nuts. Like, I don't know what they're moving it out for. What the fuck are they moving it out for? Like, there's hardly any new movies. I don't really follow it so much, but I feel like there's not. Like, we used to get too many new movies. Like, you might have a whole weekend. When I was back in high school, a whole weekend where you go and watch movies. Now it's like I'm interested in one movie every month or two if I'm lucky. I don't like doesn't seem to be anything that would even get me there. Not to mention the prices just doesn't dictate. It seems not even worth it. Like, Mission Impossible would be cool, but like, can I please go sit in a theater? The floors are sticky. The butter on the popcorn, I have to pay for butter, or they don't even give me butter anymore. The fucking popcorn and popcorn and pop in Canada is $28. I wish I was fucking joking. The movie ticket is $20. Well, same from $16 to $27. So it's like $50 to watch one. Are you fucking kidding me? Like, you used to be able to buy a Blu-ray for like $35, $40. Who the fuck is paying $50 to go to the movie theater anymore? It used to be $5, and then popping popcorn and a candy was like another $10. 15 under $20 each. Like, they've gone fucking mental. So I don't even care if theaters go out, to be honest, and I'd much rather sit at home. Got people in their cell phones all the time at the theater now, talking, whatever. Just it's just like the cell phone thing is distracting for sure too. I talk sometimes, but I mean, I don't know. I try not to, but the whole etiquette is gone in movie theaters. It's not a good experience anymore. It might have been one day, or at one point, but not so much anymore. And Oracle 195, you little son of a bitch. Okay, I think Disney's gonna bounce off this 109, 110 here. The quarterly Carmona, Target, Oracle. I need to put Disney on here. You don't run them. Even Disney's not really worth selling a put on now. I don't pay shit. 85 cents. I swear the options, the puts, like selling contracts has been very lackluster this whole month. Like, look at all the risk you gotta assume here. Only to make $1.84? I'll sell an at the money put on Disney. It's 110. It's 110 and 9 cents. And they're only gonna pay you $1.84. $1.84 and 110 is not even 1%. So if this, yeah, okay, 1.6%. If the stock moves 1.6% at the downside, now you're in the red. You should be getting like 3% leeway on, considering, like, yeah, the IV is not even 50%. Brutal.
My clients are better off taking the $30 cash. I don't want Paramount to raise the money. I don't need a higher bid. Right now, their bid is superior. And so that's where our clients are going, both in terms of cash, but more importantly, time. And again, the small company...
Pretty low on Oracle. That's what I'm talking about. The stock just dumped 15%, and the IV for next week's contracts aren't even 50%. The volatility is not even 50%. The volatility should be like 150 to 200% right now with a move like that, because it should suggest that there is it's going to be very difficult to understand which way it's going to go next week. Like, this is fucking crazy. The stock was already today 186. A 187 contract only paying $2.89 when the EMA is 150. You can't even sell that. A 160, 16 cents. 150 doesn't even show up. 150 should be like $1. These are all garbage. I've been borderline disinterested in playing the market this week. And there's been some good opportunity in the last couple of days on certain tickers, but I've basically just been waiting for Lululemon. I made a little bit yesterday. I think I showed. I mean, like, what did I make yesterday? I don't even know what I made it on either. What did I make it on?
A rich life isn't a straight line to a destination on the horizon.
Lulu and AI. Okay, yeah. So I closing out some of my Lulu and some of my AI. Made like 966 bucks. Or not, sorry, 940. And what did that translate into today so far? Lulu keeps fluctuating. A minute ago I was at 1200 and now I'm at, sorry, a minute ago I was at 1400, now I'm at 1200. So 1300, 1400, 1500 I would have been. So 1500 minus 940, so that's 600 bucks, 550 bucks. Definitely not life-changing money. That's barely bill-paying money. I had the car, I had to take the car in. They installed a faulty part. This fucking body shop installs a faulty part. Installs a faulty part. And then, I swear these commercials are louder. I'm just going to turn it down. They install a faulty part, and they only warranty their work for 3 months, which every other place in the whole city is 1 year. And the part broke. The part was faulty. And I'm like, okay, you got to fix it. You charged me fucking $300 labor. And I was like, what the fuck? And they charged me for an inspection I didn't need. I'm like, I don't need an inspection. it's one of these three things you do. I know what it is. Anyone on planet Earth knows that that's the serpentine belt. But I don't know, it's fucking annoying. So 500 a day, that's just groceries and unexpected car payments. Like, okay, the one payment you don't, that annoys me the most, unexpected car payments, because they're always hundreds of dollars. There's no such thing as an unexpected car payment that's like $20. They range from the low hundreds to thousands of dollars. I almost want to short Oracle again, even though it's bullish engulfed. I just feel like if you go back to this other candle, 196.91. Yeah, 196.91. If I can make this bigger, because you guys probably can't even see it. 196.83. 196.83 could be basically where it's headed. And it did get up and out of this. So downside 194, upside 196.83. And I have a feeling we more or less traded sideways for the rest of the day. Collect any premium that goes out on that.
Of OpenAI, and as we've been promoting all morning, we are now joined by Disney CEO Bob Iger.
There you go. Let's see what this does to the stock price.
For what's the first time, Bob, you and I have done this a few times. I want to start with you, if I can, Bob. Just first of all, why are you doing this deal, and what led to it?
Well, this is a great opportunity for the company to enable consumers to engage with our characters on what is probably the most modern of technology and media platforms today. And it not only gives consumers or users an opportunity to do so, but it also is significant because in this deal, OpenAI is both respecting and valuing our creativity, both our characters, but also those that have created those characters. So it gives us an opportunity really to play a part in what is really a breathtaking growth in essentially AI and new forms of media and entertainment.
Does it represent any risks for you? When I think about it, I know the voices of actors are not going to be a part of this. It's going to be the images, Bob. But that said, your own Imagineers, those who've created, obviously, these untold stories for you that have made the company it is, do they look at this announcement and worry at some point people who are manipulating short-term video using your characters are going to replace them?
Well, first of all, what we're doing here is we're licensing about 200 characters for users of Sora to create their own, basically, videos using Sora and those characters. We are not including name and likeness, nor are we including character voices. And so, in reality, this does not in any way represent a threat to the creators at all. In fact, the opposite. I think it honors them and respects them, in part because there's a license fee associated with it. The other thing it does is it enables us to be comfortable that OpenAI is putting guardrails essentially around how these are used, so that really there's nothing for us to be concerned about from a consumer perspective, meaning this will be a safe environment and a safe way for consumers to engage with our characters in a new way. And also let's be mindful of the fact that these are 30-second videos, so we're not talking about creating either shorts or movies for that matter. And we know, because we've seen a significant amount of growth in consumption of short-form video, we also think this is an era where almost everybody can be a creator of sorts, and we've seen that in breathtaking fashion on other platforms. And this is a way for us as a company, really, to provide experiences to particularly younger audiences engaging with our characters in new ways.
Yeah, Sam, obviously Sora's success has been significant. It's one of the reasons you cite for all the compute that you need to continue to build, given the usage rates there. How do you view it? Do you expect that it's in fact going to lead to more activity on the platform, the ability to use these characters?
Yeah, we hear so much from users about how much they love Disney's characters. Disney, I think, is the greatest storytelling company in the world, bar none, and people really want to connect with Disney characters and express creativity in new ways. And we are confident from everything we've heard from our users that they're going to respond very well to being able to do this. And I hope that it'll unleash a whole new way that people use this technology and a new model for the companies making the technology
whole new world?
and rights holders to sort of
It was a
responsibly
miss. You could
figure
have
out
said,
how
I
to
hope
get
it
this done
unleashes
together.
a whole
Can you expand
new
on that? What do you mean when you
world.
say unleash a new wave,
A
Sam?
whole new world.
You know, one thing we found again and again is that we have underestimated the amount of latent creativity in the world. That if you lower the effort, skill, time required to create new things, people very quickly are able to bring ideas to life and you know, make new kinds of entertainment, art, code, all sorts of things with this new tool of AI. And if we can enable people to do that and give them more flexibility, like with these 200 Disney characters, I don't know exactly what we're going to see, but I think people will come up with amazing kinds of ideas.
Right, and to that point, and I know Sarah is very concerned here about the princesses. There are going to be guardrails around the usage. Is that right, Sam?
Yeah. Again, Disney is a great partner for us for this because they've been so willing to work out how this new world is going to work together. But there will, of course, be guardrails. It's very important that we enable Disney to set and evolve those guardrails over time. But they will, of course, be in there.
Bob, is the deal exclusive, or is it possible for you to go out and sign a similar deal with other short form video or companies that provide that ability?
This is a 3-year license agreement, and there is exclusivity at basically the beginning of the 3-year agreement. So, yes, it is partially exclusive.
So for the first year, for example, I would guess, something along those lines?
That would be a good guess.
Now, why did you decide to invest $1 billion in OpenAI along with this deal?
Well, obviously, we've been mindful of the significant growth in AI to begin with and extremely impressed with the progress that Sam and OpenAI have made. And that includes, by the way, as I said earlier, their agreement to both honor and value and respect our content. And we want to participate in what Sam is creating and what his team is creating. We think this is a good investment for the company. It's kind of a way in of sorts for us to appreciate even more what is obviously something that has significance in terms of the long-term impact on our business.
And there are warrants that came along with it. I guess you're not giving us any specifics, though, in terms of where those are struck. Is that correct?
That's correct.
I think that's correct.
Mm-hmm. Okay. Bob, at the same time you announced this deal, I've reported on a cease and desist letter that was sent to Google. I would imagine there's not a coincidence in terms of the timing. I'm curious as to what your conversations have been like with other platforms, including Google, and why you chose to make that move today.
Well, we've been aggressive at protecting our IP, and we've gone after other companies that have not honored our IP, not respected our IP, not valued it. And this is another example of us doing just that. We've been in conversation with Google, basically expressing our concerns about this, and ultimately, because we didn't really make any progress, the conversations didn't bear fruit, we felt we had no choice but to send them a cease and desist.
And Sam, on that same note, did your conversations with Bob and you're reaching a deal here come out of conversations around IP, or can you give us some sense as to how we got here?
We always have wanted to respect IP. When we launched Sora initially, we had a lot of blocks in place, but we knew that if there was one company that we wanted to start partnering with, Disney was the obvious one. And so we have had a long discussion going with Disney, and we found them to be a sort of open-minded partner as this technology has evolved. And it was very clear to us that we really wanted to find a deal to do here.
Is it possible you'll sign similar deals with other companies as well?
The demand for Disney characters in particular from our users is sort of off the charts, so I won't rule out anything in the future, but we think this alone is going to be a wonderful start for what our customers want to do when it comes to, you know, putting themselves in that one lightsaber scene from lightsaber fight from Star Wars, or making like a Buzz Lightyear custom birthday video for their kid. I think this is going to be like quite a big deal for our users, and then we can reevaluate from there.
So I just want to understand, sort of, you're looking at obviously what people are doing, and you're seeing them interact with these Disney characters on a frequent basis. I guess that's what I'm hearing, right, Sam?
Well, they'd like to be interacting. There's desire to do it. They haven't been able to yet. Yeah.
They'd like to be. When does this start, by the way?
I don't know if we have the launch date yet, but we'll try to get it in there as soon as we can. And Bob, in terms of the use of Sora videos on the Disney Plus platform, which is also a part of the announcement, can you give us some sense as to how you're envisioning that, or how that would work?
Well, we've wanted for a long time to have what we'll call user-generated content on our platform. In this case, it will be user-prompted, Sora-generated content. We'll be licensing AI Sora tools in order to do that. Initially, what we'll do is we'll curate some of the videos that have been created on the Sora platform and put them onto Disney Plus, which we think is a great way to increase engagement with our Disney Plus users, particularly the younger users. And we're going to do that as soon as we possibly can.
You're right. So there'll be, I don't know, some sort of a tile or something that I can access as a Disney Plus user to look at what people have been creating that you guys have decided is worthy of showcasing.
Yes, and then ultimately to enable users to prompt Sora to create what they want to create on our platform. Yeah, that's a big step for us.
Sam, I'd love to come to you if I can as well.
There you go, David. You see, if you
what am I looking at? Wait, what was I looking at? Yeah.
Well, you put it up very quickly, but there you go. There's a case of someone who wants to have a race against Lightning McQueen from Cars. This is what I think Sam's ultimate fantasy is, which is ultimately to hold the lightsaber himself.
That would be cool.
That's surfing with Stitch.
Bob, it is inclusive of most of the Disney characters that we know well, and obviously because they range far and wide at this point between Star Wars and Marvel, not to mention The Simpsons. I mean, it goes all over the place. It's not just Mickey Mouse.
There are many characters here, and I think there's almost a character for everybody in this set, and I think it's going to be really fun and interesting to see what people do with them. And again, it's a great step for us. We've always been forward thinking when it comes to applying technology to both engage with consumers at a closer and a higher level, to improve our business, to essentially create new experiences in general. We were the first to license television shows and movies to the iTunes platform back in 2005 and 2006 as an example. And this is another step in essentially that direction, which is, to get on board with what is clearly an incredibly impactful and profound wave in terms of change in our society and certainly change in our industry.
Yeah, I asked this a bit earlier, but I just want to come back to it. I mean, I'm curious, Bob, what you think the reaction is in your company itself and amongst those who are your creators of animated IP. I mean, are they going to view this positively, do you think? And if so, why?
Well, they should. Our goal is in using AI is to continue to honor, respect, value the creative community in general. And we don't believe that in this case it does anything but that, really. Again, because we're not using name and likeness, we're not using character voices. That's certainly example of that. And again, the fact that we're getting paid for this recognizes the value that's been created, really, in this case, over decades. Mickey Mouse was created in 1928, for instance. It's kind of extraordinary when you think about that a character was created almost 100 years ago, was going to end up on the Sora platform. And I think that speaks volumes, not just about the value of the character and the interest that people still have in that character, but the fact that that users will be able to engage with a character that they've loved for so many years, so many decades, in really modern and I think pretty enjoyable ways.
Yeah, no, it is interesting. Of course, Steamboat Willie, it was kind of a short of its own, about 8 minutes long. Obviously a lot longer than 30 seconds, but nonetheless not not particularly long. Sam, I wanted to come to you on some broader issues in the time that we have here as well. You're going to exit the year, I believe, with about 1.9 gigawatts of compute. You've said, I believe, publicly around a $20 billion annual revenue rate. Does a deal like this help you think about an increase in terms of revenues and or your need for compute?
Yes, I mean, we expect this to drive incremental revenue and also just delightful services for our users. We have a lot of other things that we expect will drive incremental revenue.
Fucking taking a dump. Pumped to 188.50 and now it's down $5 fucking dollars. God damn. That's $500 I'm down on that now. Just in 45 minutes.
Talking a lot about Oracle this morning.
On nothing. On fucking nothing at all. On no reason to be down at all. Just fucking sell off. God damn. Getting annoyed with that stock, man. I'll tell you.
Why
What
are
a
you
fucking joke.
confident? Because others certainly are at least questioning in your ability to meet that obligation over these next 5 years.
What the fuck is that?
The value that we see people getting from this technology and thus their
And it was
willingness to
190 last Friday.
already today.
What
to say
is this?
nothing of the models
What
that we
the
have
fuck
coming
is
in the
that?
coming months and years.
What chart
makes
pattern
us
is that?
confident that we will be able to
Like,
significantly
what?
ramp revenue.
This was nothing. This was no
It's
volume.
obviously
That was
unusual
one
to
guy
be
selling,
growing this
trying
fast
to
at this
crash
scale.
it.
But
fly
it is
back
what we
up.
see in our current
What?
data. The model's
I mean, it's,
ability
you
to
know,
do really
are they trying to keep it like right at this fucking level?
chunks. I think you'll
If
start
that's
to see
the
this with
case,
our next
why did
model,
they do
and
this?
then more of the next one and the one after that. We
Fucking
are
annoying
confident we can
sometimes,
continue to drive the revenue growth to meet this compute.
It's almost like, oh, I don't even
Without
need
the compute
shares.
ramp,
I'll
of
just
course, we
log
can't drive
in
the revenue
5
growth.
minutes before the end of the day and
way more
buy
reasons to be
shares.
optimistic than
Rather
reasons
than
to be
hold for
pessimistic.
2 weeks.
Of course, we'll continue to be responsible, and of course, we'll adjust.
I
our
thought it would
plans if
climb into
necessary,
earnings, which
if something happens that's not what we expect.
I mean,
but
kind of
we
did.
see
It
right
was like
now,
160.
the demand in the market
But
is pretty extreme, and the overhang.
a little more than 180 when the stock was $450 at the start of the year, guys.
Their workflows is also
So $423
You know, I do wonder
in
if this
fucking
persists
January.
to soar on the discussion we're having.
And the best we could
It's
do
more
into
expensive for
earnings
you, right? I mean, it requires
is
more
$20.
compute. I would assume. Are you losing more money on every Sora video
Fucking
than
come on, man.
a simple query? And do you start charging in a significant way, particularly given you're going to be paying a licensing fee as well to Disney?
Eh?
We do charge today.
The best we could do into earnings was $20 fucking dollars, guys. Come on.
And I'm sure we'll
Should be up
continue to
around
evolve the
this.
business model there, but users have not indicated any lack of willingness to pay for generating videos that they love. In fact, if anything, there's been much more.
Disney, I should have just left my
expected.
contract. My
So
strike
yes,
sale
it's more
open
expensive, but
inside of
people pay much
150
more
now.
and expect to pay much more.
People are
than they
liking
do
what
for
they're
image.
hearing, is what
Do you
I'm
see
seeing
price
on the
elasticity
Disney
there in
chart
terms
right
of what
now.
you can charge?
It seems like it.
I have always wanted to be a Disney princess. Sam,
There you go.
it's Sarah. There we go. Thanks for the solution. Look, as you know, in the market, it's gone from very optimistic to a little more scrutiny on the AI trade. And I know you're not public, but there are questions, for instance, following up on the revenue question. Can you tell us a little bit about trends in ChatGPT since Gemini 3 was launched by Google and outperformed a lot of the OpenAI models?
Gemini 3 has had less of an impact on our metrics than maybe we feared. We will very soon launch a new model that we're quite excited about, as well as a handful of other features in response to their launch. You know, we have twice before seen a competitive threat, and I believe that when a competitive threat happens, you want to focus on it, deal with it quickly. We call that a code red, sort of a 6 or 8 week focus period, and then you deal with whatever you're going to deal with and you know, get back to a position of clear leadership and move on. So that's what we're doing with Gemini. This is a pretty standard thing for us. I expect we'll exit it by January in a very strong position.
Yeah, because that's sort of the question now is it's obviously becoming a very competitive race, both technologically and for market share. So how do you expect the sort of market share battle to play out, both on the consumer side and the enterprise side?
On the consumer side, there's no company I would want to
Oracle down to 192.
It will clearly be competitive, but I love where we are relative to anybody else. I think ChatGPT is the, you know, by far market share leader, and with these upcoming launches, I expect that distance to increase, not decrease. I expect our market share to go up. The enterprise side is still earlier. We intend to go in there, but we have a lot of work in front of us, and it won't be easy. The set of services we want to offer finally has, I think, come into clarity, and the models are getting strong enough that I think enterprises can really transform. But that will be one of the big stories of 2026, is the companies competing for that. Again, I love the position we're in, and I think our strength in consumer is going to really translate, and we're going to try our hardest to go win enterprise.
And Sam, to those who say, well, simply looking at it on a cost per token per dollar per watt, to quote Satya Nadella, one of your partners, you guys are not going to be able to beat Alphabet. How do you respond?
We expect to beat Alphabet. We're incredibly excited about our upcoming chip.
Your upcoming chip. When do you expect to actually be deploying that?
As soon as I said that, I realized you were going to ask me. We're not ready to talk about that part yet, but we will talk about it. And we are very focused on having the cheapest cost per token in the industry at the highest level of intelligence.
Yeah. Bob, I know you've been listening here, and I'm curious as to how you viewed the landscape as well in terms of who you wanted to partner with and whether ChatGPT was always sort of the #1 target.
Sam and I first met actually when I was retired from Disney in 2022, and he gave me a bit of a roadmap of where OpenAI and AI was going. And everything that he predicted has come true a lot faster, actually, than he thought would unfold or would happen when we met in 2022. So we've been extremely impressed with OpenAI's growth and what Sam and his team have been able to achieve. And of course, on top of that was their appreciation for our content and their willingness to license it and their willingness to help us protect it and to protect value. So we're very excited about what we see. We also think there are great opportunities for our company to license other product from OpenAI to make our company more efficient, to grow the top line, to essentially accomplish a lot of what we feel we need to accomplish in the years ahead.
Yeah, well, you say you're going to become a major customer of OpenAI. What does that mean, Bob?
Again, we think there are a lot of opportunities here beyond Sora to license product from OpenAI, and we intend to do just that.
And
we
as
appreciate
you view, as you view this significant change in terms of the ability of people to create content, Bob, from your standpoint, I mean, don't you still see it as a significant threat over time to Disney? And the use, obviously, of short-term videos and the time people spend with them?
It's interesting, David. We've always viewed technological advance as opportunity, not threat. First of all, you can't do anything about it. No human generation has ever stood in the way of technological advance, and we don't intend to try. And so we've always felt that if it's going to happen, including disruption of our current business models, then we should get on board and figure out how we advantage our company and our shareholders, by moving forward with a sense of optimism and being aggressive about it. Someone once said to me that creativity is the new productivity, and I think you're starting to see that more and more. And Sam alluded to it earlier when he talked about just people liking to create or enjoying the creative process themselves, whether they're creating short-form videos or all sorts of other things that this technology enables. So it's going to happen regardless, and we'd rather participate in the rather dramatic growth rather than just watching it happen and essentially being disrupted by it. So we think this is actually a way for us to be part of these developments as opposed to be harmed by them.
Yeah. Interesting listening to you. Of course, it takes me in part to what I've been covering nonstop, which is the fight over Warner Brothers Discovery, Bob. And one of the key arguments from an antitrust perspective that Netflix will make is that we're not just streaming. Streaming is not just us and HBO and Disney Plus. It includes Sora and Instagram and TikTok and so many other platforms. How do you view that?
Well, one thing, it's nice to be an observer and not a participant in this. 8 years ago, we announced a deal with Rupert Murdoch to buy a number of the assets of 20th Century Fox at that point. And we were actually, in many respects, when you look at what's going on, we were ahead of the game, so to speak, in that we saw the coming wave of streaming already had begun. And we were going into that business, and we felt we needed not only more volume in terms of content, but more quality, more quality IP, franchises and brands, and also more talent. And so thinking of what the world could become, we jumped on board back then, and we're certainly glad we have, because now the companies are fully integrated, and with it came control of Hulu, and that obviously has been very significant and will continue to be in terms of our growth of streaming. So that's, one, in effect, position that we're taking is kind of looking at what we did and now looking at what others have determined they must do in order to succeed going forward. We don't have, skin in the game, so to speak here, except
no, but you got a view. You definitely have a view. Yeah.
Well, I think if I were a regulator looking at this combination, I'd look at a few things. First of all, I would look at what the impact is on the consumer. Will one company end up with pricing leverage that, might be considered a negative or, damaging to the consumer, and with a significant amount of streaming subscriptions across the world, really, does that ultimately give Netflix pricing leverage over the consumer that it might not necessarily be healthy? Additionally, I'd look at what the impact might be on what I'll call the creative community, but also on the ecosystem of television and films, particularly motion pictures. That, these movie theaters, which obviously run our films worldwide, operate with relatively thin margins, and they require not only volume, but they require interaction with these films and these movie companies that give them the ability to monetize successfully. That's a very, very important global business, and I think it's, we've been certainly participating in it in a very big way. We've had, I think, $33 billion films in the last 20 years, and, so we're mindful of protecting the health of that business. It's very important to the what I'll call the media ecosystem globally.
Well, what I'm hearing you say certainly sounds like you'd prefer Paramount as the owner of Warner Brothers rather than Netflix. Will you make that case to regulators at all in terms of this process?
We haven't determined whether we'll take a position or not, but I was suggesting what regulators should be looking at.
Okay. And do you view Netflix as a more serious competitor than if they should prevail here?
I'd rather not say anything more than I've said.
Okay. Well, we're coming to the end of this time, and certainly appreciate it. But Sam, let me sort of end with you in terms of what we can expect. You mentioned, obviously, we're going to get the latest version of ChatGPT, I guess, any day now. Anything you want to preview in terms of what we might anticipate?
Bob said something earlier about how this has gone faster than we thought, and I was reflecting on today is actually our 10-year anniversary from when we announced OpenAI. And we have got some incredible new models, in particular, models that can really do the sort of valuable, difficult knowledge work tasks that we think can significantly accelerate the economy. I think that will be one of the defining characteristics of our new model, maybe the defining characteristic. And the fact that we can actually seriously be sitting here 10 years from when we started to the day, talking about a model that can do significant chunks of the knowledge work that the world needs and make things more efficient and faster and better. That is pretty remarkable. So, again, lots of good things about the new model, but that will probably be the dominant one.
Bob, I just wanted to come back to something as sort of we end here on the cease and desist letter to Alphabet. What are your expectations there in terms of what you may hear back, or whether you would undertake litigation to defend your IP?
Well, the ball is in their court, so to speak. We have to see how they react to it. We've engaged with other companies in this regard. Character AI was one, and when we warned them of the concerns that we had about it, they took our IP down. And so we didn't have to go beyond that. We'll see how Google reacts to it.
And finally, Sam, if I could just end with you, we talk about OpenAI so often, but we can never put up a chart. We can never reference a conference call. You're not a public company. But I do wonder, because of how important you are to the overall ecosystem, do you ever think about publicly sharing what your revenue projections are in the way that a public company would at this point, even though I know you're not, just because it would give us all a guidepost in terms of understanding what's going on with the growth that you've referenced?
I have thought about that. I mean, it feels a little strange to do that as a private company, but I get the reasons, and we're not anywhere close
He's
to
a
the decision to do
fucking
that, but I'm not opposed
scammer.
to it either. I don't know
No,
what all
he's
of the
not
legal
gonna
complexities
fucking
would be
share.
there.
He's a
I
scammer.
assume we could do it in some way.
Come on.
And
Give me a break.
I think it might
Fucking
help
goof.
contextualize why we do some of the things that we do. And you know, unfortunately, a lot
Be
of what we
a
share with
little
investors
odd to
ends
tell
coming out
people,
anyway.
you
So
know, how much money we actually make instead of just
Right, well, if
lying.
you choose to,
You know,
feel free to join us.
then, you know, like, the
Yeah,
whole
I
grift
appreciate
would
it.
be over, and fucking
Bob
I'd be
Dagger, Sam Altman,
exposed.
thank you both for taking the time today. Very much appreciate it.
That's what I heard just now. That's what I heard.
Thanks, Sam.
I mean, that
Break.
great discussion, obviously. I think I
Where the
wonder
fuck
what
did
the
this guy
reaction is
come
going to be in
from?
Hollywood.
Where did he come
to
from?
this move, right? Because Hollywood, it feels like it thought Sora and it thought OpenAI, right?
Yeah.
That was the initial gut response, and this is now sort of a peace deal. And Iger was very clear to say this is just short-form videos. They're not going to be making movies. So I wonder if this changes the tone.
For
It's
now.
interesting, and obviously he made it clear that you can't stop the technology, and so you've got to sort of you can't
For now.
benefit from it.
Anybody want me to look up any charts or anything like that? Feel free to ask. I will look that up for you.
In this case, to a company that's planning some elements of erotica for verifiable adults. That's a changing character for Disney.
No erotica for Disney princesses.
No, I think they made it clear, Sarah. You're safe. And you can start using Sora and putting yourself with the princesses.
Which is what I've always wanted.
But you're
going back to Sleeping Beauty.
You're our princess, Sarah, no matter what.
Thank you, David. I thought actually, just to say, the updates from Sam Altman on OpenAI, also very newsworthy given the market's fixation with the AI trade. He sort of blew off the threat a little bit about Gemini 3 on Google, which has been key. He talked about the revenue growth, just updated in terms of whether they feel they will be able to meet it to compensate for all the compute that they're adding, which is, you know, maybe that combined with the Disney investment will be a confidence boost.
Yeah, I mean, it would be if it were a public company. As we said earlier with Jim Carl, it would be interesting to see what OpenAI was doing today and whether it would be responding positively to this announcement.
Right.
Check Oracle, check SoftBank.
Yeah, you can check SoftBank, yeah.
At least Disney's up 1%, and we actually have an all-time high on the Dow, which would be an 18th record close for the Dow if it closes at this level this afternoon. David, thanks.
Sure, thanks.
As always, David Faber, joining us with the first street reaction to some of that news. Rosenblatt Securities senior internet media research analyst Barton Crockett. Barton, I wonder if you'd been listening and what kind of thoughts you had about how this moves the whole narrative forward on AI.
well, yeah, I think there's a couple.
Broadcom reports tonight and Costco. Holy shit, I forgot about that. Wow. Okay.
And peak concerns kind of all around. They're getting $1 billion
Broadcom is a big one.
giving them their content and using their tools.
Broadcom is like part of the Mag 7, which is more than 7 now. It's 10.
It's clear that in the future.
Wow, yeah, it's still way over. Broadcom's coming down, guys. There's no fucking way this doesn't. It's either coming down or it's going to $500 overnight. I'm telling you. It, in March, it was 138. It's 400. Like, are you fucking kidding me right now? What? Huh? Are you serious? You fucking... What the fuck? Come on. Give me a break.
And to what degree they are trying to sort of protect at least the sentiment of their creators, their creative community.
Well, I mean, certainly there's a carrot stick going on right here. So, OpenAI started off pretty controversially, right, where you had to,
Yeah, being distracted by LULU here. The puts on Broadcom, of course they're up 100% today. Fuck. Could just sell a call, bro. Just sell calls. Like, what's it gonna go to? Fucking 500? 50? 600? It's $400. And it's like vertical. Look at this shit. It's fucking vertical. Let me guess what the price targets are. 436, 440, 480, 525 from Cantor Fitzgerald. 435, 435, 450, 450, 400, 400. Jesus Christ. Do they all fucking remember what this stock was trading at in April? Where are these price targets coming from? Are you fucking out of your goddamn minds? It's almost sickening, the level of greed. The stock is up almost 300% in not even 1 year. Fucking 2023, it was $41. What? 2 years ago. Oh, sorry, $51 2 years ago. It's trading at 400 today? Are you out of your fucking minds? I'm gonna sell calls. Fucking give me a break. Give me a break. That's a scam.
Netflix and Paramount are fighting over Warner Brothers. Iger did address
December,
I guess
what we
issues
got
the
for
antitrust
December
regulators should
12th.
be thinking about there, but didn't really tip his hand in one direction or another. How do you think that deal, whichever way it goes, will impact a Disney?
Yeah, look, I think that
450 would be another 10%. 440 would be 10%. So 450 would be 12.5%, which is utterly insane, which would be a straight up vertical candle again, even though 3 weeks ago it was 345. Man, they're not even worth anything. Look at that shit. $1.41. Brutal. That's 360. 360. Probably does not go down though, so that's probably just a waste. 360 would be the EMA. I feel like that'd just be a waste because why would they pump 123 million volume into it 3 weeks ago if they were just going to bring it down? That doesn't really make sense.
Shares are off of the session lows at least, but she has more in today's tech check. Hey, Seema.
It's clear that the market is growing impatient with Oracle's inability to articulate the precise amount of debt it will need to take on to fund its data center expansion. On the call last night,
Let's see what the 19th is.
Substantially less than the $100 billion estimate analysts have been ballparking, and its commitment to holding on to
Read up, man. They're not even worth it. You have to put 50K up? 50K? To make $340 for a week? For a week. They were $5 yesterday too. That's, oh my god, what a joke. What? 50 cents to put up 50K. 50 cents. 50 bucks. $50. Oh man, what if Amy Go drops to 360? Oh, come on. They want $4 for the 360, for fuck's sakes. So for $40 down, they want $4, and for $40 up, they want $5. That's a tough strangle right there. It just seems bad. It just seems like $800 down the tubes. I don't even know. I don't think shorting stock could be long term. Could be fine. It's $2 trillion. If it goes to $3 trillion, what are we talking here? Our shares 4.72 billion.
Exactly, Sarah. I think they wanted a more definitive answer from Oracle's management and Chairman Larry Ellison about how they're looking to fund
630. This is the math, did not math there. What's going on here?
around vendor financing, SPVs, looking at equity, a foreign investor like a sovereign wealth fund. These were all the different ideas that analysts were discussing. We didn't get that level.
3 trillion divided by 4. Oh, I did 472 million once. $635 a share if it goes to $3 trillion. It was $158 fucking dollars. Come on. I don't know. This is probably just going to be one where you're going to have to just chase it. If it goes up, you chase it. If it goes down, you chase it straight up, and just avoid the options, because I don't trust the options on that shit at all. And it's a 0 day. Tomorrow's Friday. Fuck.
So let's break it down into the economy and the market. So 2026 looks like it's shaping up to be a year of what I refer to as equilibrium. We're going to have, I think, on-trend growth. So by trend growth is sort of historical average, about 2% real GDP. Fairly benign first half from an economic perspective. We'll see some positive tailwinds from fiscal policy. In particular, the One Big Beautiful Bill. There's going to be some tax breaks for corporations as well as for individuals. And also, I frankly think monetary policy is a bit sounding dovish to me. From two rates. I know we'll talk about rates in just a second, but I think that the stopping of QT is going to have a positive effect in terms of monetary policy, and there's going to be some additional tailwinds from that. So from a economic perspective, the first half of 2026 is shaping up to be pretty reasonable.
These are big. These are big today.
Markets as well. So we'll continue to see some positives in both fixed income as well as equities.
I guess how much of that is already priced into this equity market in terms of forward expectations on growth and earnings?
Well, after the Fed meeting and the announcement and the somewhat, I'll call it hawkish, a little bit hawkish tone with regard to actual additional rate cuts, with the idea being maybe there's only one more rate cut priced in. Our view is that there's probably two to come in 2026. So we're a little bit more that the economy is going to be a little bit slower, again, more towards an equilibrium. And more than that, to get to what I would refer to as the neutral rate of interest on Fed funds, our view is that should be around 3%. So that's a little lower than maybe what the Fed expectations are or predictions. So for 2026, that should be helpful, again, both to fixed income as well as to equities as we go through the year.
I wonder what you made of his view that we're maybe underestimating the degree of job loss, and also the notion that midterm years in general are kind of dicey, the worst of the cycle.
Well, we're not without volatility, and there's certainly going to be more headlines to come. But yes, and the challenge for the Fed is the fact that they're really working with stale data, and that's very concerning to them. And until they see actual evidence, they're more interested in sort of delaying.
I'm still falling.
The Fed beige books that was published did seem to indicate
I'm not bullish.
and I think in that way it gives the Fed some opportunity to continue to be pushing down Fed funds a bit.
The best performing sectors this year: communication services and information technology. It was a year driven by AI winners. Does that continue? Is that where you want to be positioned? Because you say that the gains will continue, but where will leadership come from?
Well, I definitely think that the AI story is absolutely a real one. And it's not just real in the short run, it's real in the long run. And obviously, Fed Chair Powell talked about productivity. I think that we're going to see a more broad-based acceptance of artificial technology as tools, and that's going to have an impact not just in 2026, but beyond. So I think the tech story continues, and I think it's a good one. AI and AI build-out of the platform from infrastructure bases.
Right under the 48 because you run up and recheck. Yeah, and that's what I'm thinking. Like the stock can move violently. You did see three. I mean, this is literally, guys. This is textbook trading right now. If I saw this at open, this is free money. I would have called this out in the Discord. That's 3 black crows, and I would have drawn a line halfway and to here, and that's exactly just below where it went. And I would have went. I'll just show you literally what I said this, and I've done this hundreds of times in our Discord. Hundreds of times. I said 3 black crows. 1, 2, 3. And I went, and I would have went, and I would have went, I would have drawn it like this. Boink, 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 or boink, boink. And in both scenarios, it's going to move up. Right? And that's exactly what it did. So you would have been told to buy this, right? And then you would sell here, or you would sell here and re-short. And that's exactly what happened. Like, picture perfect. 3 black crows, but 3 black crows on the 15. So it's not like you're trading this. This is not like, oh, it's going to go down all week or tomorrow or after earnings. Like, earnings could just change that up entirely. That would have been for the scalp. Oracle 192. LULU.
So we still have a fiscal story, and that is there's a lot of borrowing to happen. The expectation is that the Treasury will be issuing more on the shorter end. The 10-year has been anchored in the mid-3s to the mid-4s in a trading range. I think we're entering year 4 of this trading range. So actually, I feel like the rate story at the 10-year is probably pretty stable within that range. The short end is where the action's been, and I think will continue to be. So that means a steeper yield curve for the future.
Tesla's not had any luck today.
Still ahead this morning, former NEC Director Gary Cohen's with us. We'll get his reaction to the Fed rate cut yesterday. We'll get his take on the economy, of course, the president's affordability push, and a lot more.
Plus, we will get to the CEO shakeup at Coca-Cola. Why now? What does it mean for the company's strategy? We'll give you some answers when Money Movers comes right back.
Money movers, that's hilarious. I always post the market movers. GEV, wow. Okay, that was one that was coming down the other day too, I believe. Wow, Carrie, that was like so prophetic. You want new things for your ear to hear. Thanks, Carrie. I would not have guessed that unless you told me that. And it was so eloquently said. She's so fine, though. Oh my god. She has like 7 kids, though. It's kind of gross. It's a lot. That's a lot. Viking.com. Discover more. They actually look really good. My mom went on one. I paid for her to go at the start of this year, and it looked sweet. Lulu, what the fuck are you doing, bud? 10,000 shares sold just now? What is going on there? Just out of nowhere. 10,000 shares shorted? Huh? Huh? Trying to scare people out of their shares? I'm thinking so. Yeah, absolutely. Already moving back up. And Broadcom's still falling. Disney, not really doing anything with the news. That is a bull flag, though, on the 15. Oracle just chilling. Like, that's what I kind of said. They want to run it sideways now. Burn all premium. Tomorrow is what you want to be looking at. Kind of at the end of the day, you'll be buying 0 DTEs on this fucker for one direction or the other. But I wouldn't do it now. You'll just lose premium. Just wait until 5 minutes, 10 minutes before close, or even 3 minutes before close, and strangle it. But I would lean puts on that, actually. I know there was a couple people bullish on it in the comments, but I don't think so. I think the market, like I said earlier, the market spoke, and they want to bring it down. Again, most of the money it's made has been in the last 2 years, so it's not like they're at 160. It's still up 100%. It was trading at $80 2023. 80. 80.
Welcome back to Money Movers. The Federal Reserve voting as expected for the 3rd consecutive rate cut this year. That's, of course, in the middle of a labor and inflation inflation data blackout pretty much stemming from the government shutdown. Here with us at Post 9 to discuss what's next, the former director of the National Economic Council during President
I
Trump's
still
first term,
chilling.
also the former president of Goldman Sachs and current vice chair of IBM. Got it all in. Gary, welcome. Always good to have you after Fed Day like this. So what do you think they're going to do next?
First of all, it's great to be here.
Thank you.
Well, look, I think we're in the same place we've been for the last year. And what I call that is we're in the sort of great dilemma. And I think the Fed's in the great dilemma because they are fighting the dual mandate. We still have sticky inflation at 2.8%, which is well above their target. And we have an employment market that is soft. And I think the Fed chair yesterday admitted that it may even be softer than we think it is. So how do they fight that dilemma? And then I ask a third question, which is how effective are these rate cuts at affecting either of those two outcomes? Right now, we continue to see the Fed cut, and we don't really see much of a change in much of the data. Now, we're missing a bunch of data. We're going to get some data next week. But inflation right now, we've been talking about the last mile and the stickiness of inflation for well over a year. We've been stuck around this 2.8%.
I just loves these catchphrases, hey? Stickiness, softness, hardness, sticky. He said sticky about 9 fucking times already. This guy's loving. He like learned those words one time on the market floor or something, on the trading floor, and just been in his back pocket ever since. I talk like this, people will think I'm smart and I know what I'm talking about. Actually, we don't know what the fuck you're talking about, buddy. No one knows. We pretend to know. Sounds bad. Sounds not good. Sticky, doesn't sound very good. Sounds not pleasant. Is that what you mean? The market is not pleasant in terms of jobs? Because I guess that's what you mean by sticky. But if you were Snoop Dogg, he likes sticky. He says sticky, icky, icky, put it in the air. So I don't know. I guess it's from the eye of the beholder whether or not sticky is good. Guys, I don't know. No lag. Got no. There's air pockets, guys. Like this, they're literally saying nothing. They're not saying anything. What are you talking about? Air pockets? Air pockets. What? Huh? I think they have a joke before the show. Like they meet and they're like, what's some shit we can say, and how many times can we say it? And then they just they bet on it. Like, oh, I bet you can't say air pocket and sticky 7 times, without sounding bad. Or I almost feel like it's like that. That is legitimately what they're doing at this point. They talk about employment as if it's like the same as well across all of America. Like America is so vast and huge, it's not even funny. So to compare employment in Los Angeles to like Arkansas or the Appalachians or Maine, like it's like, what are you guys fucking talking about? It's completely different depending on the region and the sector. If you were to talk about wafers and chips, I don't think you'd be saying the jobs are sticky or weak or soft. You'd say they're fucking very heavy because it's booming. You know what I'm saying? So stupid. It's fucking. I don't even know why I'm listening to this thing. I just wanted to hear Bob Iger and Sam Altman. Really, is what it comes down to.
This enterprise AI solution piece, it's happening. It's transitioning companies as we sit here today, but it's evolving. Every day, companies will get a little bit more efficient. They'll get a little bit more productivity. They'll get rid of some people in a certain area. They'll retrain them into another area, and we'll look at the end of the year and we'll say, hey, look, margins went up. We got more productive this year. I don't think you're going to see this huge catastrophic change where one quarter, oh my God, how did we perform so much differently this quarter than we did a year ago this quarter.
So what about the investment that is underpinning that, which has been a major driver of GDP growth? Does that continue next year?
Yes, I think the investment continues. I think companies are getting smarter about the investment. There's a lot more discussion in the corporate world about return on investment on AI. And companies are getting clearer what to do with it. So how to get their data into a place that their data makes sense. How does more recent data affect versus older data? How do we use that effectively to drive the best AI outcomes we can? But again, it's evolving every day. Again, we think these things are going to change overnight. You know, take any of these things. Even take Waymo, for example. You know, Waymo's adapting street by street, city by city. Okay, they're in a city, but they won't go on the highways. You know, AI's not a lot different.
So do you think the market is over-exuberant in the timing then? Does that suggest things are overvalued?
Look, I think markets are always over-exuberant. The new shiny thing is always over-exuberant. And so that's why markets are markets, because people tend to overvalue future earnings. They tend to undervalue companies when they're not doing well. And that's what makes a market.
So Lululemon, this beat earnings 100% of the last 8 earnings that beat. Still makes billions of dollars. They actually grew. They didn't even shrink. It's been down all year. What?
You know, we've got the top-end consumer that is beyond flush today, and they can continue to consume, and by the way, that
76.
has a meaningless effect on them. It doesn't have any relevance where they buy a house, where they buy a car, where they invest, where they go on vacation. It has no effect. We've got the lower-end consumer, which is the vast majority of this country. That consumer is in a tough spot right now. And again, the Fed rate cut
Thinking of selling a December 26 190 call on Lulu. It's worth $11 right now. It's definitely down on the day. What was it? December. I was looking at 19th, but 26 might not be too bad. You just get more money, more downside protection. So if it really gets shit on, then I would be totally murdered.
That's a market rate out. The mortgage market is a market rate. What the Fed does when they cut rates is what they're trying to do is they're trying to dissuade savings. So if you have your money in a bank earning a certain rate, and we say, okay, we're going to
The 185s, which is at the money, pays 13. 190, which is like an extra $5, pays about 11. Oh, actually, the open was 11.73 and the low was 11.20, with a bid of only 10.35. So maybe like 10.75, 10.50, 10.75. $10 downside protection takes you to 174. So it gives you about 5.5% downside protection. It was not a lot. Not a lot. But how much is it put for like 25% down? 184 times 0.75. $138. 138, so you're looking at 140. A dollar? That is not very good.
That's the way the consumer looks at the economy today. Right now, that basket of groceries is costing him more. Filling up the gas tank is costing him less or the same. So there's a little bit of
a dollar for 20% drop. Where'd it go? Oh my god. It's like 25%. Why did I do 25%? 94 times 0.8. 147. 147. Yeah, that's on it. That's it. $1.38. Brutal. 145. $1.10. I'm just trying to think like if you could add on a put on it. But they're not paying much at all. 155 paying 224, 160 paying 3, which is not a big deal. Oracle's still falling. It's down $3. 340, now it's 3. Hmm. 160 divided 184. 14% down for $3. So you could add another $3 protection, bringing your total to $13 downside protection. And that's just too close. If your downside protection, you want it like way out, and you don't want that to hit at all. And they're not paying on LULU. If you go, they're just gonna be too expensive. Well, I guess I'm actually surprised they're not. Look at that. 450. It's like 10% actually. That's quite a bit. That's a lot actually. Sorry, 1%. 1%. Should be like 0.3%, but it's like much more for some reason. I don't know why. Disney is just holding that bull flag. I think it's gonna shoot up. And she goes up to back up to 112 where that dark pool candle was. So you had Disney dark pool at 111.94. I think actually, yeah. This is just a tightening bull flag, and then it's gonna go boink right back up. In like one candle, possibly two. Costco is a tough one. Costco dipped respectably. It double topped and then dropped. But I mean, it was just like $1,000. So the options on Costco are unplayable. Way too expensive. Way too expensive. Can't even play them. Just curious. What about like January? Fuck. Just hold it for like a month. January 16th would be a monthly in January. Oh, barely didn't even change. Still only $10. How is that? Oh, that's for 200. Sorry, for 190. $14. $1,400, guys. Oh man. Oh, that is attractive to say the least. Might be sexier to get out of these shares and sell 180 puts, because I already have the shares. If it goes down, I was gonna lose anyways. If it goes up, I was only gonna make an extra $5, $500. Like, who cares? I might completely change my stance on what I'm doing here today, guys. I am getting cold feet with holding shares. Although it looks like it wants $230. I think I would be very happy to take $1,000 overnight. Because if it goes up, these are crashing. That's what's going to happen. If it goes up, they crash. What do you guys think? You guys got any thoughts on fucking Lululemon? Slow day, yeah, man. A little bit. Started out hot, but very slow now. Clash accent suit for all Ozempic type drugs. Yeah, good luck. You'll never see any money, man. No offense. I've been in 8 of them. I saw $0 from any of them. The best paying one paid plaintiffs, so I guess us. He paid us 7 cents on the dollar, and I never did get that 7 cents on the dollar. I would have been happy to take 7 cents because I had 0 cents, so I would have been happy to get 7. And it was that one was for some company that fraudulently used Tesla, a lithium mine in Alberta. Fucking bullshit, man. I was just, fuck. It was not good. It was totally fraudulent. But anyways, never got on a dime from any of those class actions. The lawyers take everything, man. And then they say right in it, if you read it, you should read it and see how much it says that you will get. And it's extremely low. But again, I mean, it's better than nothing, because that's what you get. Most of the time, you just get fucked. But I don't know why they didn't actually pay us. Maybe they didn't win. Fuck. Maybe it said in there like we have to contact them. Like they're just scuzzy. I'm sure. To tell you that you're only gonna get 7 cents on the dollar is already scuzzy. Better Call Saul had more ethics than that, right? So Sal, what was his name? Sal. What the fuck was his name? Sal something. I can't remember his last name in the show. But either way, if we sell really falls, it's like February, March, sell some big ass loops on this shit. Barely goes up. 170 pays $12, but it's February? $12. Whoa. I could see it really collapsing if it fucking collapses. I could see it going under 100. I'm scared about Lulu now all of a sudden. I don't know why. I was super confident the other day, and now I'm just like, I don't know. Am I being crazy, or... What does next December? Just this curiosity. Curiosity killed the cat here, boys and girls. Holy fuck. Pay's huge. Pay is huge. $3,300? What is that a month? 200. Oh, I guess that's not that much. 275 a month. You could sell a 100 and what's that? 90, 95. You could sell a 95 for $4, and Lululemon would have to fall another 50%. 50%. Oracle. Man, chilling.
Great news, Nick. Legacy boxes are still in stock. With Christmas just around the corner, there's still time to buy the best Christmas gift ever. Legacy box. That's
Number 26. Yeah, 150. 180 of $1.80 versus January 16. Double the price. Would owning Lulu that low be so bad though? That might not be so bad. 160 truly feels like the bottom, but it's tough to say because COVID. Where were we? COVID. We were 240 at COVID, but it was considered a growth company then, and it's not considered a growth company anymore. And at COVID, the COVID low was 129. So I feel like that is the ultimate double bottom is 129, which is very far from 185. Very far.
Hi, I'm Alan Jones, founder and CEO of Bandy. I created Bandy so small business owners could take back control.
Another 31% drop. Oh god. 140 would be 25%. Is he gonna drop that all overnight though? I don't even know. December 26. 140 pays only 90 cents. Fuck, I was like so stoked to make like 2-3 grand on this. I was like, you know what? Yeah, I get 100 shares. I'll sell like 205, 210 calls. If it goes up, the 13% move at 184 times 1.13, that's $207. So that's pretty good. I pretty much get the full amount on that, and that's, I was selling them for like $6 plus, so 205 minus 184 plus 6, so that's $2,700. $2,700. That'll be a good Christmas, but now I'm just thinking like, yeah, what if it goes back to 160? What if it goes back to, what if it falls beyond that? Like if it goes down 20%, overnight. That's 147 from 185. $37, $38 a share. Like, ooh, that's sketch, right? So if you sell at 180, that's 11 bucks. That means your downside is 170, which is not bad at all. It's not $2,600. It's only 1,100 or 10. 1,050. It's 1,050, but it's you get a lot more protection. So you're literally trading the fear of it dropping for protection. You go to 175, you get 800 bucks. I mean, that's not bad. 175 divided by 185, you're getting 6% downside. It's not great though. 165, $500. Right? Not too bad. 165 divided by 185, that's $20 a share downside. That's 11% downside protection. That's all the way to December fucking 26. If it starts to go down, it's going to keep going down. That's the problem with selling a put on it right now. Is if it starts to go down, it's going to keep going down. So 165 for next week would be $4 only. And 165 for tomorrow is probably way worse. It's starting to fuck off. Yeah. Well, 300. Yeah. So yeah, now you're really trading off a lot of potential gains for virtually fuck all. And then on the flip side, you might as well do like a December 26th or something. So if it does pop, you're getting the maximum $10, $11 on a 190. Yeah, you know what? I'm going to man up on this. This is either going to be a good Christmas or not a good Christmas.
When my AC unit and entertainment system both broke, Everything Breaks covered it all, saving me almost $6,000. Hassle-free, totally worth it. In 2 years, Everything Breaks covered 4 major
1,000. That's 2,000.
$8,000 camshaft fix. With an Everything Breaks protection plan, you're covered from the skyrocketing cost of repairs. Home, electronic, and auto protection plans that cost less than anyone else and give you more. Plus, when you bundle plans together, you save more. Whether it's under your roof or in your garage, cover it all with just one call. For a free instant quote, call Everything Breaks today. 1-800-934-5767. Tailored plans to fit your needs. Benefits that start on day one. And the peace of mind knowing unexpected repairs won't break your budget.
510.
Request a free quote by calling Everything Breaks now.
77.
1-800-934-5767. That's 1-800-934.
All right, so we sold a 195 call. We have 100 shares. We sold a 195 call. And I think we're going to sell a 165 put. Oh, that was a December 26th, yeah. Okay. But for tomorrow, not for December 26th. So, like, we don't have to wait. We'll do 160. I don't even know if I want 160. I don't even know if I want to sell a put at all. I don't think so. I don't want to hedge that side of it at all. like 150 divided 185 is 20%. But I mean, stocks have moved just utterly massive. Look at Oracle, 14%. What was that other one? The Trade Desk. Like, God, that stock is fucking beyond saving. $37. It's done. Amazon is destroying this company. This company's fucked. This company's done. This company's zero. Holy shit. Look at the fucking... Oh my god. Oh, 1,000%. Holy shit, guys. So this one was being touted as a long because it got added to the S&P 500, and I was like, oh, that usually means the stock only goes up 3%, guys. And it was already trading like extremely high. Look at the stock. Look at the stock. 91 to 50 after earnings. It dropped 50%. So I don't want to get in on LULU. It dropped 50% after earnings. 50%. Like 60. 40%. It dropped like 40%. And now it's down 60 something percent. 05 divide 91.45. It's down 59.5%. 60%. That's 60% since August. Since August. It's going to zero. Amazon just stole their business. Look, pre-COVID, $20. It's probably going to $20. Minimum. Minimum. I don't know where there's support here. Where's their support? It's below the support. It's fallen below the support. She's cooked. God, what if LULU went down 40%? Can you imagine? I would probably die. I think I would be dead. Like, I wish I was joking, but I would probably be like, yeah, I'm good. $90. Just wake up, it's $90. So it's 10,000 overnight. Sketchy. I don't want to sell. Normally, I would protect at the downside. I'm fucking not going to do it. Only because of their ties with China. I feel like America might punish them for it. It's a Canadian company too. It's not American, so tariffs, but also, it's not American. Simple as that. So they might be abandoning it, like they did with Shopify. Shopify was dominating, and then they just like abandoned it. It's been well in recent months. Oh, okay, never mind. I just want to show you a chart. Okay, it gained everything back. It's completely back. It's a Canadian company, one of our largest companies. They dumped it. I hadn't. Fuck. I guess I don't look at it enough. They dumped it. Dumped the hell out of it, and then fucking back. 164. It's about 180. It's about. Sorry. It's like right here with the high of 182, which is right here. So, which is virtually a double top. I mean, I can't. How do these people hold these kinds of stocks? How do you hold a stock from 24 to like 182? And why couldn't I get that on AMC? I wanted 108. It was 73 or 78. Like, come on. I was this close, guys. This close. Questionnaire. What the fuck is this? What do we got? Why is the radio playing over? I mean, it should be low. Because I'm listening to the radio. Go back over Oracle, please. Yeah, I could turn this off now, actually, because I don't even care what they're saying at this point. We were listening to Bob Iger and Sam Altman from Disney and Alt AI. Go back over Oracle. I just think Oracle's going to like 160 TLDR. I'm looking at 160 entry on that. I don't see it crashing so much today and then just recovering off of that. It did double bottom at 185 though. That was a literal double bottom from November. But now you could start looking back towards April lows, in my opinion. I'm no longer bullish on that at this moment. I scalped it this morning for couple $100. I could have had 800, I guess. Looking at it, well, I scalped it for a couple $100, and then what was I gonna say? I'm targeting 160. Goes to 160, I'm probably gonna put 50K in it. But I appreciate you guys stopping in. I am going to jet for a bit, get a drink and stuff, relax a little bit, and I will come back for the Discord here closer to the end of the day, where we're keeping an eye on Disney, Costco, Broadcom, and Lululemon earnings tonight. So we will see you guys then. Cheers.